Hi, I'm Christine Short, Director with S&P Capital IQ Global Markets Intelligence. In this week's Lookout Report, we preview what's expected for first quarter earnings season. On Tuesday, April 8th, investors will be tuned into first quarter report from Alcoa, which will unofficially kick off earnings season. The lead up to earnings season has been less than ideal, with the first quarter estimate for the S&P 500 index dropping to 0.4% from the 5% that analysts expected on January 1st. This 0.4% growth rate would be the lowest growth rate since the third quarter of 2009, when we were in the midst of the recession. However, as history has told us, the early profit estimate typically goes up by about 3.5% by the time the season is over. The sectors expected to prop up that low growth rate are telecommunication services and consumer discretionary, with expected growth of 39% and 8.5% respectively. For telecom, high growth once again is related to the fact that Sprint Nextel was included in the index in the year-ago quarter and performed poorly, leading to easier year-over-year comparisons. If Sprint is removed from the year-ago figure, first quarter growth would be up only about 20%. The company fell out of the index on July 8, 2013, replaced by Nielsen Holdings. Therefore, we will see this impact for the last time in the second quarter of 2014. The consumer discretionary sector is the estimated secondary leader of first quarter growth at 8.4%. For the first quarter, the auto components, internet and catalog retail, and multi-line retail industries are the biggest contributors to profit growth. Forward estimates suggest a healthy U.S. consumer will prevail in 2014, with an overall calendar year growth estimate of 13.5%. Analysts estimate the energy sector will be the biggest laggard for the first quarter, with a negative growth of 5.1%. The oil, gas, and consumable fuels subsector are expected to drag on the sector, with a bottom line expectation of negative 8.5%. Many companies within this industry struggled with higher operating expenses and lower production volume in the latest quarter, and 15 of the 31 companies are expected to come in negative. The good news is that analysts expect the sector to swing to double-digit profit growth in the subsequent 3 quarters of 2014, resulting in calendar year growth of 8.6%. Revenue estimates have surprisingly remained strong as we head into the reporting season, currently estimated to come in at 4% over last quarter's 1.6% on a revenue per share basis. Strength, again, is coming from consumer discretionary, the leading sector for top-line growth with an expectation of 14.6%. Next week, we'll see 7 companies report for the first quarter, beginning with Alcoa on April 8th and ending with JPMorgan Chase and Wells Fargo on Friday, April 11th. I'm Christine Short, and thank you for tuning in to this week's edition of the Lookout Report.